As a wholesaler or new real estate investor, there's nothing worse than pricing the property wrong. If you price the property wrong from the beginning, you don't have a transaction. If you're a wholesaler, there's nothing worse than going back to the seller and trying to renegotiate the deal because you don't know what you're doing. Today, we're going to go over how to look at comparable sales, price a fix and flip the right way so you're successful from the beginning. This is the D Money channel. Welcome. If it's your first time, please like and subscribe if you like this type of content, and let's rock and roll.
I'm going to go over with you today the biggest mistake every wholesaler makes and or new real estate investors, so you do not make that mistake and lose money and or not be able to sell the property you're trying to wholesale. And the first thing is the comparable sales. I would much rather some new wholesaler come to me first and get their cash buyers lined up so we can help you and tell you exactly what we would pay for the home rather than overpaying for a home and having to go back to the seller and renegotiate. That's the worst thing you could possibly have to do. I'm going to show you an example of Fayetteville, and we're just going to look at a typical fix and flip. And what I'm going to do right now, because of the market, I'm not going to pull up any particular address because I think you get in trouble for doing that. So hold on. So here's a perfect example of, a neighborhood that it's in this neighborhood. What you're going to want to do right now, because the past year has been so insane with real estate prices, you're only going to want to look at what has sold in the last 6 months, and you're really going to try to bring it down even further to the last 3 months. A lot of real estate professionals believe there's going to be a major crash, so the closer you can get to the comparables of like yesterday or last month, the better. Here's a market. This is a pretty easy one. It's all contained in this neighborhood. Let's show you here. Hold on. Yeah, this is a pretty no-brainer. So this all looks like it's the same neighborhood. All of these homes have sold within the past 6 months. Then from there, let's see if you can do 3 months. You could do 90 days. Okay. I would take it even further. Okay, perfect. So you've got a 307, a 375, a 310. Okay, let's see what the difference is here. 2230, 3000, 2272. It's interesting. So what you're going to want to do is you're going to look at each one of these and see if they've been rehabbed or if they are. This one just sold, which is awesome. What year are these bad boys? I usually use a paid service, so I'm not as familiar with Zillow. So 2014, okay. 143 a square foot it sold for. It's pretty new house. All right, that's 2272. I know this one over here, right about the same square footage, sold for 310. So this isn't a very difficult one, okay? Your value would be, this one just sold in July. Let's see. Yeah, it's all rehabbed, all new. This is a no-brainer. Let's go to something a little more difficult. That was too easy for you guys. Let's go to a neighborhood that might be a little more challenging. Okay, here you got a market that's all over the place. Here is a major dividing line. You do not want to cross this. You would look right here. You really want to try to be within a quarter mile, especially tends to be in the lower income areas. It could change street to street, block to block, big time, like totally different universes. That's how different it can be. You can see this cluster here. There would be no way I would come down here and look at this 97. And that's what a lot of wholesalers will do. They'll be like, oh, 97, that's the price. Look, no. Here's a 10, a 19, a 41, a 35, a 20, yeah, 197. And you're over major lines, you're all the way over here. It's a totally different universe. And that's what I want to get you guys to understand. You can't take it out as far as you typically do, especially in this price range, because this is an anomaly. You throw out the high and you throw out the lowest. to come up with your price. I mean, you can just look at this area right here. This is a rental market. This wouldn't be an area you would utilize for a fix and flip. You would look at this as for a rental. There's nothing to fix and flip. Here's an interesting one over here. You know, what's going on with this house? Okay, this 1575, and you have these. It looks like a new build, so this looks like probably this one is an older style home that was built 1958, and these homes look like they're brand new. So you can't compare a home that was probably built in 2014 or 2020 even. Let's see, when was it built? This would be an area I wouldn't really want to buy in unless I was going to tear down the house, and I really wouldn't want to spend $150 to tear down a home. So you want to make sure you're not going over major lines. You want to be as close as you possibly can to the other comparable. And if you're looking at straight cosmetic upgrades, I'm going to show you how we do it. Okay, so if you're looking at straight cosmetic upgrades, so I'd come in here, I'd put my ARV that I think it is. So if we're dealing with any particular home, say this house is 1,200 square feet. Well, I know it's typically $22 a square foot just for cosmetic upgrades. That's not including a roof, AC, anything else. Just straight internal, normal kitchen, bathrooms, flooring, normal cosmetic upgrades. So 1,200 times 22. So I'm going to be at 26.4 for repairs. I'm going to add some to that because you never know when you open up walls or do certain things, there's always extra. So I would take that up to be safe to 31.5 as a wholesaler. That's what I would do. Holding cost, I would put that at $9,000 for miscellaneous and holding costs for the investor. Investor profit, if they're going to spend 31 in fixing it up, they're going to want a $30,000. Well, they were going to want as much as they possibly can, but we're going to put in 30. You never want to go below 25,000. No one will touch it. If this home needed 50 or 60 in repairs, then the profit needs to be 50 or 60. It has to match with the exposure. If my exposure is higher, my profit needs to be higher. Then you would come in here, you would put your profit, okay? Hopefully you're going a little light on the ARV, so you know in your mind that's probably worth $230, but this is what you're presenting to the seller. And then your seller offer would be 3040, 139.5, and you always want to check it both ways. So I want to make sure that I'm in the 50-some percentile, so 139.5 divided into 220, 63%. So I would probably take this up a little bit. I would either take this down to 210, or I would take my repair number up because it makes me nervous that I'm in the 60s. You need to have a little more meat on the bones. So I would take this probably up to 34.5 and take this down to 215. And then that would fall in line with closer to the 60% or in the 50-some percent ARV category. You don't want to overprice. You don't want to give too much money and not be able to accomplish it. A kitchen alone could be $34,000 if you wanted it to be. So that really is not an unrealistic to completely do a total cosmetic. I mean, we're talking new flooring, bathrooms, every number. So you want to be anywhere from 20 to 25 a square foot. If it was a nicer home, you'd be in 30 to 35 per square foot. This is more of a middle of the road neighborhood. I hope this helps you out. Always try to get your cash buyer first so you can find out their number. These are fix and flip numbers. You need to find out, is your buyer paying cash or they have hard money? Because you're going to have to factor in different things as well. I hope this helps you out. This is D Money. I absolutely adore you. Peace out.